All of a sudden, bang, it's on the table, two-way risk, even money. What was yesterday all about?
That's a great question. You know, we have a lot of data on the calendar this week. We didn't have a lot of data yesterday, so it wasn't clear that markets were necessarily queuing off some, new information. But certainly there's going to be a lot of opportunities to do that for the rest of the week. And so, we're going to be looking forward to sifting through all of the various data points.
When you go through the probability, you're gauging the probability via Fed funds futures. There was a surge in volume yesterday. Is that the best way of looking for how a market is set up ahead of a risk event like the Fed?
It's really hard, I think, to get a gauge on this, but typically the best way to look at it is just what the price is doing. So clearly we saw the odds of a March rate hike go up a lot. People are kind of shifting back in that direction. And so there's definitely an opportunity to kind of, further that as we continue through the week and into next week, or kind of wind it back.
So there's some two-way risk on the table. For the FOMC, I wonder what that two-way risk looks like. I go back to that speech back in September from Governor Brainerd, who pretty much shot down the hawks ahead of the Fed meeting and said that policy should be somewhat tilted towards guarding against downside risks. Is that quote still relevant many months later in this environment?
Oh, absolutely. I mean, the one thing that has not changed much is the Fed funds rate, right? So it's still very close to zero, even though they got that one rate hike in. And so the leadership at the Fed is certainly going to be continuing along that sort of line of thinking that, we really don't have a lot of room to cut here. We need to be careful until we get rates up much higher, which could take several years.
So here we are, a little bit later, we get the address from the President to Congress, and many investors, participants, kind of treating this as if it's a Fed governor coming out and setting up the odds of the chances of a move in March for rates. Does a hawkish Trump really mean much to the Federal Reserve as they meet in 2 weeks' time?
It's hard to imagine, regardless of what he says, we're still going to be trying to parse through all of the, different policy leanings and figuring out how this stuff actually gets implemented, and that continues to be the million-dollar question, right? And so until we get clarity on that, which we probably won't, maybe not even this year, we're not likely to see a big, acceleration in Fed tightening based solely on fiscal policy.
So this week kind of bookended by several speeches, two big ones. The President today, the Fed chair Friday. The Fed chair, as you were, doesn't muddy the message, or is there something new coming?
I would imagine that given how high the odds of a rate hike have already climbed, they're close to 50% now, you can't imagine that they're really feeling like those are too low, especially if they're not necessarily inclined to move. So we probably get another situation where central bankers trying to stick the landing as a good central banker does.
I'm going to ask you this question because I asked it of a guest yesterday. Do we really believe that the Federal Reserve sits around the table and William Dudley gets WRP out on the Bloomberg and says we got the green light, we got the red light? Do they really look at this and say we're north of 50%, we should go?
I really like to say that it's the other way around, that markets will move above 50% if it looks like it's likely that the Fed is going to go, and the causality doesn't necessarily run in the other direction.